Welcome to G2 Weekly Market Update, where we break down the key global market and economic developments shaping investor sentiment. Markets kicked off the new year on a strong note, with equities rallying across major regions despite mixed economic signals and lingering geopolitical uncertainty. Here is a snapshot of how global markets performed this week. United States. US equities rallied in the first full trading week of the year, with most major indexes reaching all time highs. Small cap and value stocks outperformed large cap growth names, and the Russell 2000 led gains, while S&P 500 still posted solid advances. Market sentiment remained resilient as investors looked past geopolitical tensions and reacted positively to policy related developments, particularly around defense spending and housing finance support. However, economic data pointed to signs of a cooling labor market. December job creation came in well below expectations, with downward revisions to prior months, while job openings and hiring activity continued to soften. Manufacturing activity remained in contraction for the 10th straight month, although the services sector showed continued resilience. In fixed income markets, treasuries posted modest gains while municipal investment grade and high yield bonds outperformed amid improving demand. Europe. European equities posted strong gains, with the Stocks Europe 600 rising over 2%, supported by optimism around growth, earnings, and easing inflation pressures. Data suggested that the Eurozone economy may be stabilizing, led by better than expected industrial production and retail sales, particularly in Germany and Spain. Inflation across the euro area slowed to the European Central Bank's 2% target, although services inflation remains elevated, keeping policymakers cautious on further rate cuts. In the UK, softer housing data and declining mortgage approvals highlighted lingering economic uncertainty towards the end of 2025. Japan. Japanese equities delivered robust gains, driven by technology stocks and continued yen weakness, which supported export oriented companies. Expectations of further policy tightening by the Bank of Japan pushed government bond yields slightly higher, while officials reiterated their commitment to gradual rate increases as inflation and wage trends improve. Encouragingly, household spending rebounded strongly in November, signaling a more durable recovery in consumer demand despite ongoing pressure on real wages. China. Chinese markets advanced on strong momentum in artificial intelligence and technology related stocks, with trading volumes remained elevated. Inflation data showed modest improvement, with consumer prices rising and producer price deflation easing, though deflationary pressures persist across the broader economy. Despite weak domestic consumption and property sector challenges, the latest data reinforced expectations that Chinese policymakers may continue easing monetary policy into 2026 to support growth. G2 takeaway. Global markets started the year with optimism driven by equity strength and improving growth signals in parts of Europe and Asia. However, softer US labor data, persistent inflation challenges, and policy uncertainty suggest that volatility may remain elevated. Investors should stay focused on diversification and closely monitor macro trends as central banks balance growth and inflation risks. Thanks it for your G2 weekly market update. Thank you for tuning in. Stay connected with G2 Financetech for timely insights and analysis as global markets continue to evolve. We'll see you next week.